I'm Jim Cramer, and welcome to my world.
You need to get in the game.
Firms are going to go out of business, and he's nuts. They're nuts. They know nothing.
I always like to say there's a bull market somewhere, and I promise
Mad money. You can't afford to miss it.
How the heck are you supposed to find bargains in a market like this one? A market where the averages seem almost unstoppable until today. Even when they take a breather on days like today, the pullbacks are minimal. This is not a Filene's Basement or a Century 21 where everything's dirt cheap. It's more of a Nordstrom-style market where you really need to go hunting to find the stuff that's inexpensive, that month-long sale they do. So how do we go bargain hunting in this type of environment? Well, you could say we look for losers, stocks that have been absolutely hammered, and try to find the ones that have the ability to turn things around, make themselves into winners over time, or at least in the not-too-distant future. Take Magnum Hunter, MHR, a company that sounds like some sort of Clint Eastwood movie you never got around to watching, but it's actually a small oil and gas exploration and production outfit. Magnum Hunter is only for speculation, say that right up front. It says a market cap of roughly $650 million. That's very small. But if we're willing to take the risk, the company has some top-notch, unconventional assets in areas that we talk about all the time here on Mad Money, the Bakken Shale in North Dakota, Eagle Ford in Texas, Utica Shale in Ohio. Remember, we visited that with Aubrey McLennan, as well as natural gas exposure from the Marcellus Shale in Appalachia. That said, this stock has truly been put through the meat grinder. We last spoke to Magnum Hunter a little more than a year ago when the stock was trading at $6.40 a share. I know many of you bought it then, and I know many of you are not that happy since it's fallen 60%. I'm sorry, it's fallen 40% since then. What went wrong? Well, actually, a bunch of things. The company shut in a bunch of natural gas wells and curtailed production, in part because there just wasn't enough processing capacity, at least nearby. They had an accounting error and replaced their chief accounting officer. Magnum Hunter did a big secondary offering back in May that just crushed the stock, and they missed the numbers when they reported their most recent quarter in November. That said, over the last year, Magnum Hunter has moved away from natural gas towards oil to the point where it now gets nearly 63% of its production from oil and liquids. It has a massive production growth issue. It's up 137% in the last quarter. Company doubled its proved reserves over the course of 2012. More important, though, Magnum Hunter has catalysts that could help make this stock bounce, maybe even bounce back with a vengeance. Company's expected to sell all or at least part of its Eagle Ford assets in the early part of the year, which could bring in as much as 750 million smackers. They plan to do a joint venture with their Utica Shale acreage, which we can hear about any day now. And Magnum Hunter also intends to spin off its midstream subsidiary as a mass limited partnership sometime in the second half of the year. So there are some worries here. I did a long introduction, so I wanted you to know how I feel about the people who feel that they're angry at me because I brought the company on. And now, considering the Magnum Hunter reports on Monday, they missed last time, there's a lot to look forward to. Management has a bunch of plans to unlock value. Is that enough to take the stock from zero to hero? Let's check in with Gary Evans, Chairman and CEO of Magnum Hunter Resources, find out more about where his company is headed. Welcome back, sir.
Thank you, Jim.
Okay, there's a piece of research that came out from UBS. It says, time to market the catch, time to harvest, multiple asset monetization in the horizon. True or false for Magnum Hunter?
True.
So you think that that the value is going to be unlocked, because the value since the last time you're on has increased dramatically, even as the stock has decreased dramatically.
That's exactly right. You know, we've been saying all along that the sum of the parts is much greater than where the company's stock is trading today, and so what do we do to change that? So we've made a decision to divest one of our divisions, the most mature division, which is the Eagle Ford of South Texas. We have a limited amount of acreage, only 26,000 acres, but we have some of the best wells in the whole play. And so that is one of the properties that we've been marketing, and we hope to announce something in the near future about how we're going to divest that asset and use that cash to redeploy into our other plays.
So what happens? I mean, it was just a bunch of, there were a bunch of things that, some were not under your control. I know natural gas prices went down. But throughout this period, you've been growing your production, which is what I want to see out of an oil company.
Yeah, our production's up substantially. We started last year under 10,000 barrels a day and ended the year at 18.5, and we've given guidance this year of close to 25,000 barrels a day as an exit rate. So all we can do is continue harvesting what we have. We are extremely excited about the new Utica play. We're drilling our first well there March 15th. We'll probably drill at least 5 wells there this year, continue to add to our acreage position, and we see that as a real catalyst, as well as you know, reducing some debt. There's some concern that we have too much debt. We don't believe so. I'm a former banker of 9 years. I think we got plenty. You know, we're well capitalized, but the market wants to see lower leverage and wants to see growth, and we're going to continue to do that. We're in the long term. This is not a short-term play. We're in this business for a long term.
You don't have any large amounts of debt coming due anytime soon.
We have 0 debt coming due.
Yeah. I mean, that's again, I mean, look, I'm mystified. I know viewers are angry at me because I brought you and I said it was a speculative play on oil and that you delivered, there were mistakes. Now, it's also, you left this out. Williston Basin, you had your first well in the new acreage was acquired, was spotted by Magnum in mid-January 2013. So there could be good news on that front.
Oh, the Williston Basin is a real focal point for us in 2013. We've been drilling wells all over this county called Divide County, North Dakota, which is, I think, in the past been viewed, oh, you're a little bit out of the fairway. Well, now we got all the big boys all around us, Continental, Whiting, St. Mary's, trying to, lease acreage around us, and we're having wells now with ultimate recoveries, 500 to 750,000 barrel EUR. That's some of the best wells in the entire place. So we're pretty excited now that we've drilled enough wells, we can focus in on those sweet spots in 2013 that will give us the highest rates of return. Same thing down in the Marcellus. You mentioned earlier in the show that the gas plant was a big issue for us. We had this plant that we commissioned with MarkWest Hydrocarbons to be constructed called the Mobley plant. And that plant went live finally on December 17th. And that was about $1.40 uplift on natural gas. It makes our Marcellus wells, which are 25% liquids rich, have EURs in the 60 to 70% range. There's no other gas play in the United States that can compete with that.
Now, at the same time, when we were visiting Chesapeake, when we were in Utica, they thought there was a lot more oil in Utica, at least under their properties, and it turned out to have a lot more natural gas. Could Utica be a disappointment for you, as some would say it was for Chesapeake?
I don't believe so. There's been enough wells drilled now that we can pretty well delineate where we think the play. It's more of a north-south play than it is east-west. As you go further east, you're going to have dry gas. There's no question under some of our leases we're going to have high-volume dry gas wells. But as we go further west in the play, over in Noble and Washington counties, it is very much a liquids-rich play. So we're expecting 40 to 60% liquids, the rest being natural gas.
That is a good point, because Ohio's a big state, and that is not that close to where we were. Now, I have not seen a lot of deals recently with big foreign companies coming here, but look, there was a plethora last year. Are foreign companies still interested in buying large tracts of land in the United States to be able to make sure they have oil and gas?
I don't think there's any doubt that the foreign companies throughout the world in the areas that we've been talking to are China, India, Korea, and Japan. They want to learn our technology, but I do think they've gotten a lot smarter. A number of them have blunted their sword with investments they've made here in the United States, and so they're a lot choosier about the operator and where the properties are. So I think there's plenty of opportunities for us to bring in those kind of investors if we so want it. You got to remember, though, they're going to be in your offices, they're going to be looking down your neck. So it's the good and the bad to bringing in partners.
Absolutely. All right. Well, look, Gary Evans, Chairman CEO of Magnum Hunter Resources, thank you for coming on. Because a lot of people felt like, look, I was in the secondary. I'd like to know what's going on. You're a gent to come on the show and fill us in. I appreciate you being on Mad Money.
Thank you, Jim. This is going to be a great year for Magnum Hunter.
Okay. All right, you've now heard that for people, it's kind of like, when you think about it, if you didn't know the story, you got to admit it's attractive. A lot of people have it at higher levels, and they're probably upset. But Gary Evans came on, he gave you the story, and now you have the current information. Gary Evans, Chairman, CEO of Magnum Hunter Resources. Stay with Kramer.